Hi, welcome to the Market Alert for Friday, the 19th of June 2020. So, the headline really for today is this: will quadruple witching mark the start of a rocky stretch for US markets? It may already have. So, today we've got the quadruple witching, which will happen around 1:30 p.m., where you see the expiration of the options on the indices and the options on the futures, the options on the stock indices, etc. And this can cause volatility. But it says here, markets have become the battleground over the past week between the bulls and bears. And we're certainly seeing a pickup in volatility. There's no doubts about that. So this is key here for the next few hours, certainly, and then thereafter. It looks like we are going to see a pickup in the volatility, which we'll just have a quick look at. Again, you can see at the moment this has been moving to the downside, but could start to pick up once more going forward. So let's have a look at yesterday, and there's something very strange going on at 3:30 p.m. For the last couple of days. I mentioned this yesterday, and I will mention it again as we get into detail. But you can see yesterday that prices have now become sideways in the daily chart, with prices closing back above the 5-bar moving average in the German DAX and finding support at the 200-bar moving average and also the 20-bar moving average there as well. So we need to break out of this sideways move one way or the other to bring some momentum back to the market. Yesterday in the 2-minute chart, we kicked off. We had a long, this reversed and the market came back and did what it did the day before, where it found a lot of support at the BRN. And this increase in volatility is something that we've got to be aware of, and I'm going to come to that in just a moment about increasing timeframes and the trading range as well. However, we picked up another trade here and the market managed to move higher, but it's the pullbacks that's the killer at the moment, because the market's moving higher, then pulling back, then moving higher, and then you can see this pattern. And then we had whatever news this was drove the market up, but you can see here how it was stopped with the selling coming into the market just here. We had selling pressure followed by selling, and this brought the market back. So there were 3 trades in the morning. We had the short here as well. The first one a loss, and the second 2 a profit. But as we get into the afternoon, it's fascinating because we've had this 2 days on the trot now. We started off with a buy signal, and this was followed by a sell signal that wasn't filled. If I just click on this, you'll see the grey dot there that shows that the sell side wasn't filled. We then had another buy signal, and again you see the pullbacks. The market's pulling back a lot after it's moving to the upside, and the same on the downside as well. Here you can see the market filled, went down to the scalp because we've got the dark red there. You know, if prices have reached the scalp, they're dark in colour, and then started to find support and move up again. We then had a buy signal, and everything was going swimmingly, and all of a sudden we had this massive spike to the downside. So what's going on at 3:30 p.m? Well, let me show you. This is what's going on at the moment. They seem to be releasing these increasing COVID cases as a way of either they do. No, I'm not saying it's a conspiracy that they're doing it on purpose, but for the last 2 consecutive days at 3:30 p.m, where there's been an increase in COVID cases, has had an impact in the market. And we've seen these whips to the downside. They're blindingly quick, taken out on this trade, and then moved back to the upside, which you see here. So again, watch 3:30 in the afternoon going forward, because this is 2 consecutive days now where they've done this. Speaking of volatility, the 5-minute chart is back on the table, but today I'm going to have a look at finding the best sort of settings for this, which I will report on Monday. So I'm going to go back and do some calculations to see what we should be looking at. But you'll see on the 5-minute chart from yesterday, just the one buy signal, whereas we had the one loser to start off with. And it smoothed everything out a bit more there as prices have maintained and moved above the 200 bar moving average there. And then on the downside as well, you can see these nice longer trades as well. In the afternoon though, still choppy. We had the sell signal from the start, which took us down to the BRN, and again you see them buy straight back in. We then had the buy signal with prices moving to the upside, again with a modest pullback there. And the same thing here when we had this last trade. You can see how they whipped the market down to the low of yesterday and moved prices higher. So be warned of that 330 thing. Let's see if it's going to be something that's going to be a common feature as they start to predict some sort of second wave of COVID, or are they using it as an excuse to shake out the longs? I don't know, but like I say, it's something that I've spotted over the last couple of days, having been caught in it and subjected to it. So it's amazing how it concentrates the mind when that happens. Meanwhile, in the Dow for yesterday, again you can see incredibly choppy. It's still moving to the upside, but wow, just look how choppy these bars are, which is why we're currently not trading the Dow, because it's just too volatile. You can see from here to here is over 100 points just in the one bar in the 5-minute chart, and even in the 1-minute chart yesterday, I think this was 170 points down or something, 160 points, and then the market moved back to the upside. That's when they released the figures, COVID figures that is. And then in the late evening, you can see the market down. It does the classic retracement to 89 and then back down to the lows. But overnight, of course, or to the latter part of the trading session, you can see prices are brought back 200 points before, or more or less 200 before the close. Overnight, there is some weakness as we go into the quadruple witching. And again, we'll see how this plays out as the New York markets open at 1 a.m. and also 1 p.m. and also the Chicago markets as well, where the options are traded on the CME. And in the daily chart for the Dow, again, you can see this weakness is still prevailing. Price is struggling at the moment to get above the 200 bar moving average, but sitting at the 20 bar at the moment. But will it hold today? That's the question. And finally, news for today. I forgot yesterday, actually, and I'm going to bring you to that in just a moment. We'll have a review of yesterday's news. Powell's out again today, but he's down as a medium impact news item. I don't know why, but he's going to be speaking at 6 p.m. So keep an eye on that if you're actually in the markets at that point, which if you're trading the DAX, you won't be. We've also got the EU Economic Summit. This is at 11:15 a.m. as well after we've finished trading. So no doubt they'll be doing whatever they can to bring the markets back. But yesterday we had the unemployment claims, and as I've said before, my sort of prediction is around the 60 million. And you'll see that we're up to 46 million now. It has moved lower. However, you'll see now we're starting to develop a sideways movement here of more or less 1 million a week going forward. It'll be a boost for the market if it drops below 1 million. No doubt they'll use it. But yesterday there were... It was in my last week. Let's just have a look. Ignoring the V in industrial production. Last week, 1.5 million. Right, so it was worse than the 1.29 that were expected there. Yeah, I mean, it's a mess. It's as simple as that, and you can see that we're still continuing with the same numbers there, as you can see in more detail. So there you go. So it was the 1.5. There you go. And it was predicted at 1.29. And then, of course, the madness continues here too, as we see the Bank of England yesterday meeting, and they've printed another 300 billion, expanding the programme. And I love the language that these journalists use. It says the Bank of England has expanded its coronavirus quantitative easing programme of bond buying by 100 billion, taking the total since March to 300 billion. The move is designed to oil the wheels of the financial market, and that is it in a nutshell. If you think this is going into the economy, then you are completely misguided by this. Some banks may lend a bit, but otherwise that's where it's going. I mean, they're not printing cash either. They mentioned somewhere where they were talking about cash. They never print cash. It's bonds. They show on the news the printing presses, but it's not like that at all. Cash is a dying exchange, medium of exchange. It's all going to be electronic at some point. Let's just see. But there was a mention of printing cash, and it's not. So don't be fooled by the language of these. Oh, there you go. Here it is. It's in the bottom of the video. New cash, 100 billion of new cash. It's not cash. That's for certain. So there we go. That brings us up to speed, really, on where we are with everything. So, one other thing I've just remembered. Alerts in the software. These are now available, and there is a video tutorial available as well, which the link is in the email you received this morning about that, and it's in the next version as well. So you can download that. When you open the software, you'll be asked to and prompted to download it and install it. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.